our previous meeting, the global macroeconomic context has become more challenging. The dollar has appreciated against most currencies, including the rand. Longer term, interest rates have risen in the United States and across the globe. Short-term rate expectations have likewise shifted up. In general, monetary policy in major economies remains restrictive and headline inflation has slowed. While this has provided some room for major central banks to ease rates further over the past 2 months, new inflation pressures and heightened uncertainty suggest diminished policy space. With underlying inflation still above target in several economies, there are risks of policy reversals. Turning to South Africa, we continue to see a growth recovery taking hold after a weak economic performance through 2023 and the first half of 2024. In the near term, we expect output to benefit from a variety of tailwinds, including lower inflation, higher disposable income, and extra spending from pension withdrawals via the new two-pot pension system. It is unclear how much this will boost the third quarter growth numbers, which are due in a few weeks. The data flow has been mixed lately, with some indicators disappointing, while others have been positive. For instance, recent manufacturing data was subdued, but mining was stronger. Encouragingly, the most recent labor force survey showed relatively large and broad-based job gains and lower unemployment. Over the medium term, we still expect a sustained improvement in growth as reforms take effect. Our forecast now extends out to 2027, and we see growth reaching 2% in that year. The risks to the growth outlook are assessed to be balanced. Given mixed data outcomes, it is possible that near-term growth could fall short of current projections. At the same time, growth could be higher from next year given ongoing reforms. These include structural reforms, especially in the network industries such as electricity and transport. Furthermore, the recent positive outlook on South Africa's credit rating from Standard & Poor's points to an improving country risk premium. These factors suggest upside risks to the longer-term growth forecast. Moving to consumer prices, headline inflation has dipped below our target range, reaching 2.8% in October. Goods prices have slowed more than those for services, which mainly reflects the benefits of a stronger exchange rate and a lower oil price relative to last year. These temporary supply shocks are likely to keep inflation below 4% until mid-2025. Thereafter, we see inflation modestly higher relative to our September projections, reaching 4.6% from late 2025 rather than 4.4%. This is primarily because of a higher electricity price assumption. At the same time, core inflation is mainly lower for this year and next year, which reflects recent data outcomes. We continue to see headline inflation stabilizing near our midpoint objective over the forecast horizon. In this context, we anticipate inflation expectations will moderate further. These expectations have been quite backward-looking, with higher past inflation projected well into the future. Survey expectations remain above our midpoint objective. We expect that our policy stance and the experience of lower inflation will anchor expectations more firmly at lower levels. The risks to the inflation outlook are assessed as balanced. In the near term, inflation appears well contained. However, the medium-term outlook is highly uncertain with material upside risks. These include higher prices for food, electricity and water, as well as insurance premiums and wage settlements. Against this backdrop, the MPC decided to reduce the policy rate by 25 basis points to 7.75% with effect from the 22nd of November 2024. The decision was unanimous. The committee agreed that reducing the level of policy restrictiveness is still consistent with achieving the inflation target. The risk outlook, however, requires a cautious approach. Global interest rates could well shift higher again, and the recent rand depreciation demonstrates how rapidly changes in the global environment can affect South Africa. The forecast sees rates easing further in future, stabilizing a bit above 7%. But this rate path from the quarterly projection model remains a broad policy guide. The MPC would like to emphasize that its decisions will be made on a meeting-by-meeting basis with no forward guidance and no pre-commitment to any specific rate path. Such decisions will continue to be outlook dependent, responsive to data developments, and sensitive to the balance of risks to the forecast. There are scenarios where inflation is higher than in our baseline. During this meeting, the MPC explored two such scenarios. One assumed higher administered price inflation. The other envisioned a more difficult external environment with a weaker rand and higher oil prices. We also considered a favorable scenario where geopolitical tensions subside and the oil price falls. These risks underscored the uncertainty surrounding the outlook. Given a challenging external environment, it remains crucial to sustain domestic reform momentum. This entails both structural reforms to support growth capacity and macroeconomic efforts to rebuild fiscal and monetary policy space. The MPC's main contribution is to deliver low and stable inflation with well-anchored inflation expectations. Additional measures that would improve economic conditions include reaching a prudent public debt level, further repairing and strengthening network industries, lowering administered price inflation, and keeping real wage growth in line with productivity gains. This concludes the statement of the MPC. And at this stage, we would like to take questions. And as usual, please identify yourself and the institution that you come from. Kopan.
Good afternoon, Governor and Governors and MPC Committee. Kopan Nugumbi from Reuters over here. My first question is, why would a 50 basis point cut not have been a cautious approach when there's already some evidence that there's very little inflationary pressure in the economy? Question number two, the output gap is widening. Is keeping rates this restrictive not putting a significant handbrake on the economy? Third question is, from the statement, it seems like the global outlook is becoming more challenging and is a larger concern for the MPC. Is this purely based on the United States and the outcome of the election, or are there other global factors at play that weighed into the decision? And then my last question, what is preventing you from expressly communicating that you're setting the inflation target at the bottom of the target band and not at the midpoint at this point? Thank you.
Good afternoon, Governor. My name is Ndando Tukwana from Bloomberg News. Governor, we've come out of the US election and it's clearly had an impact on the rand and global conditions have changed since the election. And in your statement, you say that you discussed different scenarios, including the fact that you've envisioned a more difficult external environment. Would you then just please give us some insights into what that means for monetary policy and the future rate path? Thank you.
There isn't? There's one online. Oh, here's Hillary.
Governor, I may have missed something, but did you give us your implied starting point for the rand this time? I don't see it in the statement. Also, has your estimate, how do you see the neutral rate evolving now that, especially globally, conditions have changed? And what does that do to whether policy is more or less restrictive?
Okay. We'll go online. Let's take this three. Kopano, unlike in the previous meeting, there was no discussion about 50 basis points. None. So it doesn't even feature. And you ask, why wouldn't that have been cautious? I think 25 basis points is more cautious. And the environment is uncertain, and it calls for caution. What have you seen across the globe this week? Inflation in the US surprised, came out above expectations. In the UK, the same thing happened. It came above expectations. In the euro area, you had wages rising at the fastest rate since 2000. That tells you the scale that you are faced with and the uncertainty that you face. The disinflation process is there, but it is clearly a very bumpy road, and it is making central banks cautious across the globe. And as a central bank in a small open economy, caution is what is going to be at play here. You say the output gap is widening. No, it's the other way, my dear. It is closing. And it actually, for all intents and purposes, it is zero over the forecast period. So the issue that you are keeping rates and choking the economy does not feature. If anything, you should be saying the output gap is closing. And because the output gap is closing, why did you decide to cut rates? Because with the output gap closing, you shouldn't be cutting rates. But the output gap is just but one indicator that we look at. We look at a variety of indicators, and with the MPC statement, we release the key assumptions and the forecasts that we have, and you have got to look at them in their totality. And importantly, of course, links to the question Hillary was raising about the neutral interest rate. And that neutral interest rate is the rate at which monetary policy is neither stimulatory nor contractionary. So you also will have a look at that. And so Hillary poses the question, how do you see the natural interest rate evolving? Well, think of it this way, Hillary. The neutral interest rate, economists call these things R star. And so you think of the stars, you are on the African continent. If you are in the African continent at night without a compass, you look at the stars to try and figure out exactly where you are. The problem that the world economy is in at the moment is that the stars are covered by clouds. So they have not become very useful. So you ask any central bank, what is the future evolution of R star? He will say to you, well, there is no doubt that neutral interest rates have gone up. And you say, how far up have they gone to? Well, this is a non-observable variable. We do not quite know. And so what you are then faced with, besides of the uncertainty of the data, is that this lodestar that we were using to look at, we know that it has changed position, but we cannot quite say exactly how far it has changed a position. We can tell the direction, but we can't tell that it has changed. A position, and that is the conundrum that central banks are facing, and that is the level, the extent of the uncertainty. Forget having to deal with uncertainty with respect to data. These variables that we call the non-observables, like R star, the neutral rate, whether you are looking at potential growth and so forth, they are non-observable. They are very useful when you have got stable conditions. At the time when things are moving like this, it jumps a bit around. But for a small open economy like South Africa, a key component of the neutral rate is what the foreign neutral rate is. And if the people who compute, follow the foreign neutral rate in those jurisdictions are themselves not sure where neutral is, you can spare a thought for my team who must estimate what foreign neutral is from the distance that they are in. We watch it very closely, but it is not that we use that as the be-all and end-all in the decision making. It does tell us whether we are restrictive or not and how far we might be restrictive. But again, this is a non-observable variable. How is it going to? There are a couple of factors that affected it. Demographics have been mentioned in the advanced economies as one. The impact, productivity growth has been the other. And the big elephant, well, it can't be a room because it's a big global elephant, is the evolution of public debt in the key jurisdictions, including the country where what is called the risk-free rate is being priced from being the United States. That the rise in the debt, it could be redefining what R star in that jurisdiction is, with implications for R star across the globe. Kopano said output for the US, it's other factors. Well, I have mentioned what we have seen in the UK, what we have seen in the Euro area. What I have not mentioned is what is actually evolving in China. And China is a reality. You either sell to China or you buy from it. Yes, we buy from China, but we sell commodities to China. And the commodities that we sell to China had tended to be inputs into the Chinese investment program. But China is rotating its growth away from investment towards consumption. It has implications for how those commodity prices evolve over time, and it is something then that we end up having to watch very closely. And we've noted that the Chinese have tried to put stimulus to try and get the economy going, but the big thing is that China is rotating from investment towards consumption. Ntando, the US elections impacting on the other external environment, I think I have dealt with it because it was very much related to what Kopano had said. Implied starting point, it's 17 rand something.
It's in footnote 6.
In the footnote, yes. It's 17 rand 94.
So it's next quarter is 1796.
1796, thank you. Footnote 6. I've got a version here without footnotes, thank you. The last question, Kopano, what stops us from expressly setting the target at 3%? You seem to be suggesting that we are implicitly or informally targeting 3%. I just wanted to say that, well, you're shaking your head suggesting you are not, but in case anybody thought so, it's no point setting a target that is a secret, because the usefulness of the target is to influence inflation expectations. So if you set a target and it's secret and nobody knows it, but you are targeting it quietly, it's not useful as a policy anchor. We have got a process with the Treasury that we believe is coming to a conclusion. Can't quite give you the timeline because the debates become very rigorous. And once that process completes itself, we will say what the target is, whatever the number becomes, whether it is 3, 2, 4, whatever the number is, it will come forth. Zianda online.
Thank you, Governor. You've answered the first question, which was from Daily Maverick on the target. The second question is from Atol Dlamini at Alliance News. He'd like to know, good afternoon, Governor. Bringing inflation to where it is now has come a long way. Would you confidently say you've been able to keep inflation low sustainably? Are you on top of inflation now? And what's your comment on President-elect Donald Trump's re-election and expectations that his possible policies may fuel inflation? Those are all the questions online. Thank you, Governor.
Okay. Inflation sustainably low. Look at the forecast. It was 2.8% in October, and as we state, it will gradually go up towards the midpoint of our target. It will remain below target until mid next year, mid 2025, and then start moving upwards. And in 2026, we are seeing it as being at the midpoint of the inflation target. So that is what you have. If you define sustainability being that we are at our target, yes, that would be. Are we confident? Well, confidence is a matter of degree, and that is why we highlighted the risks to the inflation outlook and to the growth outlook. Those risks, if they materialize, it could change the trajectory of inflation. And as we had highlighted, there are risks that might bring inflation lower, and there are risks that might take inflation higher. But when you say sustainably low, 4.5% inflation is not low inflation. We do not believe that is low inflation. It is a target that we have. If you are talking of price stability and low inflation, it is something lower than the 4.5%. President Trump's election, governors don't comment about the presidents, especially presidents of other countries. That the policies would fuel inflation, we at the moment relying on what was said during the election as the impact of the policies that would be adopted. Once you are in government, those policies have got to be translated into government policy, and we will have to evaluate what the impact would be. There is, however, a rise of protectionism around the globe, and there is a concern that the protectionism that we are seeing could impact global trade, and global trade is the lifeblood of the global economy. If it impacts adversely on global trade, it will have implications for the global economy, and if there are responses from other players, and depending on which sectors the policies impact, yes, it could be inflationary, and if it does become inflationary, you would expect that globally central banks will react, and that changes the dynamic, and that is the uncertain environment within which we operate. That concludes the business of today. Let me thank you and wish you very happy holidays. The MPC statement also includes a list of the schedule of the MPC dates for next year. So I will see you on the 21st of January next year. 30th of January, month end. Thank you. The 21st is today. Happy holidays. You can see mine has started.